With a big run in stocks the last couple of days, is now the right time to buy a little bit of protection for your portfolio? Welcome to Trading Nation. I'm Brian Sullivan. David Seaburg of Cowen and Company, Stacey Gilbert of Susquehanna are your guests. Stacey, this is your world, the options world. We had a big run. Dow had one of its best week of the year, one of the best weeks in a long time. Should we buy protection? And if so, how can the regular sort of non-sophisticated investor do it?
Right. I'm always a believer in owning protection if you feel like you need protection. And by that, I mean, is it going to change your behavior? If the market pulls back 5 to 10%, are you going to suddenly get nervous and start dumping your positions, which is exactly what you don't want to do? But if you feel like that's your behavior around pullbacks like that, then by all means, buy protection here. If you're longer term and you're just saying, I'm going to hold this for the next 20 years, I don't think it's necessary to buy the shorter dated protection. Let's assume that you do want to buy some shorter dated protection here. While as much as the market is risk on right now, you're concerned that there is some information that comes out as Trump picks his cabinet, for example, or we get further details on some of his policies that the market does pull back here. One thing I would be careful of is owning options outright. As much as the volatility has come in, they are still expensive on a historic level. So, for example, if we looked at the S&P 500, that 5% out of the money put, this is your typical put that somebody would buy for protection. It's on a quarterly basis. It's in the 45th percentile over the last 5 years. That, to me, is just expensive for the situation that we're in right now. What I do love, and Brian, we've talked about this before, my favorite strategy out there for the I can sleep at night protection is the 2.5%, 10% out of the money put spread. If we look to February, that'd be your 211 strike versus your 195 strike put. You buy the 211 strike put, sell the 195 strike put. It costs you just under $3. I think that can give you kind of this comfort of, okay, I have some protection on. If the market pulls back 10%, you lose your protection, but to be honest, the market pulls back 10% here. I do think that you do have some people coming into this market, and I'd be surprised to see that much of a pullback. Okay.
David Seaburg, your view on buying protection, and again, you've heard Stacey's strategy. If so, what would yours be?
Yeah, I mean, look, I think we just walked in the other day and everybody took their protection off. I mean, we just came out of that cycle, or that the past couple of days, protection just got, completely taken off, if you will. But look, I agree with Stacey. I think that she makes a very, very good point when she says, if you're a longer-term investor and you're not expecting a big pullback in the market, there's no real reason to step in here and buy protection to protect your portfolio. I look at it and say, I'm not expecting a big pullback. I think there's going to be an underlying bid. I'm not going to rush out and buy protection, even though it's cheap. I get it. There's no reason for me at this point in time, given the risk-on environment we're in, to go out, rush out, and buy protection to protect myself in a 5 to 10% pullback in this market. I do not believe that's going to happen. Do I think we could sell off in different sectors? Absolutely. Do I think you should continue to take risk off within the consumer staples, within these utility names, some of these these bond proxies, if you will? Of course. But I do not believe that we're going to see a market kind of slide down 5 to 10% from these current levels.
All right, David Seaburg and Stacey Gilbert, interesting view on what has been a big market run, surprising a lot of different people. We appreciate your insights. Folks, a reminder, check out the live version of Trading Nation in the 2 o'clock hour every day on CNBC's Power Lunch. We'll see you there. We'll see you here next time. Take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.